Good afternoon. Thanks again for inviting me to speak. Again, I'm Mike Borges. I'm actually the Executive Director of the Association of School Business Officials. We are the Chief Financial Officers, the treasurers of school districts that manage the borrowing, the investing of school districts and BOCES on a day-to-day basis. So we're generally in support of allowing credit unions to accept municipal deposits. Again, we have nothing against banks. We have a lot of good relationships with banks. Banks are actually our members as well. So we have good relationships, good partnerships with banks. But again, echoing what Brian said, I think school districts need to have other options in terms of investing. And allowing credit unions to accept deposits would give school districts another option. Whether that option actually promotes better interest rates is something that I think we have to remain is to be seen. Again, we've done some calculations, and I think I've sent something to you as well as to someone in Bookwald. For school districts that do have a lot in deposits, we calculated that for some school districts, a quarter-point interest increase in their interest rates would actually exceed what they got in state aid this year in terms of their state aid increases. So what they get on deposits have a significant financial impact on school districts, particularly those school districts from downstate, Westchester, or Long Island that have significant deposits, basically money in reserves. So, and we just calculated that on average, a quarter-point interest rate increase would generate about $18,000 more for the typical school district. So we're not talking about chump change. It could be a school bus driver, it could be band uniforms. The interest rates do have an impact on student or on school district revenue. And as Brian alluded to, we do have a tax cap. So any way the school districts could generate additional revenue or savings from other things that the state legislature enacts would be very helpful. Again, in the state budget, I want to commend you all for including a lot of policy decisions that actually help school districts out of state aid. There was the building condition survey staggering, there was TRS reserve, there was piggybacking on buses. All those things help school districts outside of state aid. This is something that could help school districts outside of state aid. There were two other issues that were mentioned. One was about NICLAS and NILAF. There were two names that were thrown out. Those are consortiums run by either school district business officials or treasurers of counties and municipalities that pool basically the fund balances of school districts and local governments together to get better interest rates. So there are nonprofit organizations run by the CFOs of school districts and local governments, and they pool the investments of those entities together to get a better interest rate. They were mentioned a couple of times. Also, one of the things we also are looking at is not only allowing municipal deposits in credit unions, but maybe perhaps creating a commission that would look at other ways school districts and local governments could invest their funds. Right now, we're kind of restricted in what kind of financial entities we can invest with. CDs, money market accounts, savings accounts, things like that, treasury bills. Perhaps a commission made up of relevant experts could look at other things, other vehicles that school districts and local governments could invest their money in, like Fannie Mae, Freddie Mac, the Dormitory Authority, and things like that. So I'll just want to conclude with that. Thank you.
So you'll get the question because you're the second sort of municipal organization, but I guess it's interesting that we had the Association of Counties and then sort of you folks represent the school districts. The Association of Counties sort of took the position of hesitant because they suggest that perhaps there could be unintended consequences, therefore in the future reducing the number of entities by which they could invest. And in order for them to take that position, they at least in part have to buy into the argument that's sort of presented by some of the folks today that this would have a negative effect on community banks and therefore, I guess, lead to closures or further consolidation. You don't seem to have those concerns. Of course, the credit unions suggested today that that is unfounded and that based upon market share, it's unlikely to happen. So I guess I'm just sort of restating what we've heard here today, and you're sort of suggesting you'd be on the side of more choices is better, and you're not going to go down the road of trying to figure out unintended consequences.
Yeah, I mean, like local governments, we don't put all of our eggs in one basket. School districts put their deposits in multiple banks. So whether another bank came along or another credit union came along, we would diversify our investments, our holdings, our deposits among various institutions, whether they were banks or credit unions. And there were several comments about credit unions operating on a different plane and level the playing field for banks. You know, there's legitimate concerns there, and maybe the legislature should look at ways of leveling the playing field. But from purely a school district standpoint, the better interest rates we can get, the better it is for the taxpayer in general.
Yeah, I think our responsibility is to our students and our taxpayers, and that's kind of the scope that we're looking at this within. And, you know, without speaking on behalf of anyone else here today, other than, you know, our 675 plus school boards that we represent, you know, I didn't necessarily hear any comments that there would not be savings to varying degrees for municipalities, including school districts that deposit through credit unions. And so that's the scope and the lens that we're looking at this, and it's really our responsibility to look at it that way.
Thank you. Chairman Thiel?
Yeah, the question on unintended consequences you asked, there was other thing that was from the counties also, which was that somehow they were also maybe fearful of whether or not deposits in a credit union would be as safe or as secure as a bank. Do you share any of those concerns?
Well, in my testimony, we've said that as long as the same collateralization and securitization exist for credit unions, which I've been told it does exist.
Do your due diligence.
Yeah, I mean, you know, they would have to do the same
individual
things.
institutions, whether they were a bank or a credit union.
Right. We wouldn't bank with them, we wouldn't deposit with them if they didn't have the same requirements.
Okay, thank you.
Okay, I don't think there's any further questions.
No.
You do? No. Okay. I want to thank everyone for joining us today. I especially want to thank the Assembly staff of the two committees for all the work of putting this together. I appreciate that, and our offices are certainly open for additional comments and concerns expressed from the folks here or for anybody out there in our districts that want to weigh in on the issue. Thank you, everybody.
Thanks.
Thank you.